Bismillahirrahmanirrahim. My name is Hassan and welcome back everyone. I hope everyone is doing well in this downturn. Like everyone else, my portfolio is also getting killed. And you guys can see that for my 1 year chart, I'm down 12%, which is actually a good thing because I'm able to buy my companies at a discounted price. We can see here, this is the S&P 500. It's also down 7%. In a humble way, if this downturn does not excite you, there is fundamentally something wrong with investing philosophy because this is an opportunity that we wait for to market to get pulled back so we can buy heavily into these solid companies. And this is when the rich are able to get richer because when the downturn comes, when the market pulls back 10, 15, 20, 30%, the rich goes in because they have a lot of cash. They go in and they buy these companies while the poor are not able to do so because they spend most of their expense on their living cost. If you guys have any extra cash, this is the best time to invest into the market. Yes, a lot of people are saying that there is more downturn to come, which may be true. I want to share a very good question. And the question is, well, is the market different this time? And I say that this market is not different. You have to know what you own and you have to have a reason why you own it. You can't say like, oh, I know this company is going up. That's not a valid reason. That is not good enough because we invest into solid companies. So this time it is not different. It is the same thing that we experience time to time. If we go at it, if we look at the stock market history, we see there's a downturn here, a downturn here, there's a downturn here, here. And every single time the market has went newer highs. I think the best time to invest is right now when the market has a pullback. Yes, the Fed can increase the interest rate. We should continue to dollar cost average, especially buying these companies at a lot lower price. So this is my Robinhood portfolio. Currently it is at 36,000, 37,000. And you guys see this number right here? This number, it is a superficial number. This number actually does not matter at all because this tells me the price of my portfolio, and my portfolio changes time to time. What doesn't change is the amount of share prices or the amount of shares I have. So we should never worry about this number. Yes, it looks bad that I'm down, say $5,000 for the year, but it doesn't matter because in the long run, I know that my companies are going to do well because they are solid companies. Good companies such as AMD, Nvidia, Texas Instruments, and I have Microsoft, I have Johnson & Johnson, Pfizer, I have 3M, Skyworks Solution, I have Cisco, and I have Micron, and then Garmin, and then I have Calaris, and so on. And then I have some growth stocks all the way in the bottom, such as CRM, Snow, and CrowdStrike. These are heavily discounted companies. And if you take a look at it, all these companies in my portfolio, they have one thing in common. And that commonality is that they have very little to no debt. Even though the Fed is trying to increase the interest rate, it doesn't really matter for my company because they have very little to no debt. I'm not looking to take more debt out in the near future, or at least majority of my companies, because they sustain by not having debt. So I just want to point out another thing in the stock market that we see that in the last 1 year, it's about 6-7% down. But if we take a look at the 3 years chart, we see that in the last 3 years, S&P 500 has been analyzing 11%. And if we look at it for 5 years, it's at 10%. So if you look at it for last 10 years, so no matter what, if you guys are diversified and you guys are continuing to invest in the long run, your companies are going to do really well. And that's really, I just want to emphasize that you should be buying solid free cash flow company. You should be buying solid companies who are growing, who are constantly increasing their cash flow and increasing their revenue. So I'm going to take you guys back to my portfolio so we can see my portfolio. I'm not a person who talk about investing. I actually do it. And this is a real portfolio with real money, $36,000. I'm a big believer in diversifying your wealth. I have about almost around 30 different companies. So we take a look at our 1 week, I'm down 3%. And then for 1 month, I'm down 9%. And then if we look at it for 3 months, I'm down 13%. If we look at it for 1 year, I'm down 12%. And if we look at it for all time in this portfolio, I'm up around 11%. So I'm not a person who only show you when I'm doing well, but I also show you when I'm down in the market too, because this is what real investing is about. You cannot always be up. Oh, I only invest in companies that are always going up. That's crazy. That's not possible. Downturn will come. You will make mistakes and you learn. And I want to point out that if you look at the total return here, I'm up by 2,000, 2,400, 900, 500, 300, almost 400, almost 400, 300, 280, 270, 60. And then if I go all the way to the bottom, I can show you guys the companies that are down right now. Only reason they're down because we are in a huge downturn right now. We're down $100, $100, $100, $90. Okay, 300, 300, 500, and this the most one is 877. So my point is that here I'm very transparent with you guys. My companies make 100, 200, 300%, but when I lose, I only lose maybe 30, 20, 40%. So my gains a lot higher than my losses. So we don't have to get every single company right. As long as we're getting our winners to make 2, 3, 400%. Matter if we're losing on some companies that are losing 30, 40% because our gains are really high and our losses are very low. And one thing unique about my portfolio is that I've been investing in the stock market for about 12, 13 years. For the most part, I do well year after year. I bring unique companies. Guys, if you guys made it this far, don't forget to like and subscribe to the channel. It really helps my channel grow, and I'm almost near 1,000 subscribers. So hopefully we can reach that goal in the near term. And this is a dividend portfolio where I constantly get dividends month after month. So I'm going to show you guys my Robinhood tracking sheet, and we can see here I have for say 2020, 2021, 2022, and you can see the dividends right here. What I do want to point out that make sure you guys make one of these, and I'm going to update the data chart here. In February of 2022, I made $71.18, and then we can see my chart increasing here. And then in March, I made $79.90. And then in April of 2022, I made $60.34. A few years ago, I was making $0 in dividend payments, and now I'm making around $60, $70, $80 in monthly dividend payment. And you guys can see by December of this year, I should be hitting around $80 on average per month. You can see that I reached 100 here. Eventually, I should reach 100, 200, $300 in dividend income. Even though the market is going crazy, my dividend portfolio, my dividends that I'm receiving month after month, it is increasing. And if I to extrapolate the data, say 1,000 months out, eventually I'll reach a point where I'm able to live off these dividends. We can see here the market for the last 1 month is down 7%. It is brutal out there. So I want to take you guys to a very important question. Should I go out of the market right now? And this is a common question that a lot of the investors currently are thinking about because the Fed is going to continue to increase their interest rate. As a Muslim, we want to stay away from interest as much as possible. We want to invest in companies that are Sharia compliant or at least close to it. So the question is, should I go out of the market? I think the stocks over the next 10 years will do really well. I don't know what will happen in the next 1 or 2 years, but I know that in 10 years or 5 years, it will be up. And you have to remember a pro tip from this is that stocks are not lottery tickets. They actually have companies behind it that make them money. More companies are going to make a lot more money in the future than what they're making today. That's why stock goes up. So let's pick a company. We're going to pick Texas Instrument. We can see that in the last 5 years, company is up. And we're going to go to Seeking Alpha. Under financials, I'm going to take a look at the income statement. The income statement tells us if whether a company is making money or not. If we take a look at their revenue, we can see that year after year, for the most part, they are increasing. So we have 14,000, 15,000, 14, and then 18,000, and then almost they're at 19,000. So we should be investing in companies that their revenue are increasing. In return, their share prices should increase also. Guys, if you guys made it this far, make sure you guys like and subscribe to the channel. It helps my channel grow. As always, thank you. See you guys next time. Bye, everyone.